In this short video, let's talk about how we might predict prices in the future, price forecasting. So here we have some historical information from our company. You know, total assets, the total asset turnover ratio. We need to know net sales. What do we expect sales growth, or what was sales growth that year? We need to know the net profit margins, dividend payouts, PE ratios for that year, and how many outstanding shares the company had. We'll then calculate the average, right? So this far column here is just the average of those values. We're then going to convert that now into our forecast. So this, again, here's sales are roughly 8.97%. Again, we can plug this number down here. I'm going to adjust a little bit. Obviously, it's rounded a little bit. But we put the sales. Here's their sales growth, right? It's based on this estimate or our sales. Net profit margin, what has that been averaging, etc. And that will then give us some forecasts. What do we expect sales to be? Again, the formula here is just the sales in the previous year times 1 plus that growth rate. Net income then is just going to be sales times the average net profit margin. Earnings per share is the net income divided by the number of shares. Dividends per share is the payout ratio multiplied by earnings per share. And then finally, in the end, we have a prediction of price based on the average PE ratio. So you take the average PE ratio and you multiply that by the earnings per share. So here we have a prediction that over the next several years, our stock price should be rising, right? If nothing else, at least we have a forecast for increased size or wealth of our shareholders. And whether or not this number is totally, again, for this example, that's how it works. If we had a real company here, hopefully it would make a little bit more sense with the numbers at the bottom. But again, the idea here is just to think about the variables associated with value, right? The assets that you have and how efficient you are, right? The sales that you have and whether that's growing and the profits from those sales. How do you distribute that profit? And how do shareholders view the company, right? PE represents their optimism about where the company is going in the future. And of course, outstanding shares is just based on the decisions of the company for gathering funding. In this case, this shows some small growth over time of increasing the shares. Okay. One of many different types of forecasting models to forecast prices. Look forward to see you next time.